What are the issues, one or two issues you think we should be looking at going forward from here? Sylvie, maybe we can start with you.
Yes, I mean, that's a very good question. First of all, to finish on this one, I guess the most difficult to implement from a fragmentation perspective is certainly the resolution-driven rules. I would very much like that Andreas' positive view is coming real, which is not the case currently. What keeps me awake at night is basically that it's very difficult to the global macroeconomic picture currently, with the interaction between macroeconomy, financial stability, financial regulation is quite unstable. And as soon as you have uncertainty, it's not good. And we have a lot of uncertainty and a lot of difficulty to understand the global mechanism. Take the relationship between banks and market. I mean, it is true, and that has been said in the last panel, banks are in a much, much, much better shape than they were before the crisis. We have a huge amount of capital buffers. The amount of core tier 1 in all major banks is higher than 10% nearly everywhere. That's a huge difference. We have a huge amount of liquidity. Liquidity buffers, thanks to the regulation, can be said, clearly are higher than before. If you take my bank, for example, and clearly there was noise in the market on all banks last week, but clearly, I do have, and it's public, more than 200 billion liquidity. Things are those numbers. Compare those numbers with what you read about the amount of non-performing loans in some other countries. That's a huge number as a level of one bank. And still, markets are overreacting. Why? I guess because people really don't understand that banks are much safer, but markets are much weaker. And why markets are much weaker is because markets are really thin now. And clearly, because of regulation, we've been reducing all major banks, our inventories in terms of capital product. And the consequences of that is that capital market liquidity has been decreasing hugely. And the impact of that is that because in a small market, every move drives a lot of volatility. And if you take the market of CDS, it's a very dangerous market. Why? Because it's very thin, 100 million. That means that if you want to move a CDS by 10 basis points, 10 million are sufficient. So that's really something that does not give a good indication. So it's very difficult to make people understand that banks are much safer, but markets are less and much thin, and therefore they give the impression that banks are not safer just because they overreact. And why they overreact? Because you don't have any more liquidity, because banks are not providing that to the market.
But some might say you're blaming the messenger rather than the message. But so what's keeping you awake at night? One final point on that.
Also, the uncertainty, markets need certainty. And for example, we spoke about the regulation. It will be very good because, clearly we need to provide investors they need to know when and where we're going to make money. It's very difficult to be very clear about that if you don't have a clear view on when regulation will stop and what will be the cost of certain regulation. And clearly what you have...
John Cunliffe is saying the regulation is there now, the FSB,
No,
Basel...
and clearly what John Cunliffe said about the Bank of England reaction, that really wanting to give certainty, that was very welcome in the market. Certainly.
No Basel IV.
And basically, well, it's not Basel IV. You can have Basel IV, 5, 6, all over you want, as soon as you have certainty. Because you can manage with everything as soon as you have certainty. And now what's going on in the market is that basically you need also to understand what the trade-off of that certainty is, that we're going to be less profitable than we were in the past. And what happened now is that a lot of people look at us and in fact the regulation is more or less like, we have been cut one leg, and then people look at you and say, well, that's very strange. You're running less fast than you did before. Of course. And people have to expect that, which is okay. That's basically okay as soon as you can have certainty.
Pierre, what's keeping you awake at night?
Well, what's difficult with that question is that you always worry you're going to mention one thing and tomorrow it's going to be something else. I'd say two things quickly. One is the structurally low profitability of banks in Europe, not in the US, in Europe.
Are we overbanked?
When you have banks that, not all of them, but most of them, are barely covering cost of capital, ROE is barely covering cost of capital, or is 2 or sometimes 3 percentage points below that, and that is still the case today, then there is cause for worry. There's cause for worry because how did banks react to that problem over the last 5 years, 6 years? They've reduced costs. And they're getting closer to the bone. And yet, at the same time, their costs have increased, regulatory compliance. And when they want to invest, what do they invest in? They invest essentially in new technology, digital channels in order to remain competitive with other banks. In a situation like this one, normally market theory will tell you that there should be consolidation. There should be mergers across Europe. But I'm not sure how I see this is going to happen. I'm not sure
What's
we're going to see...
What's holding things back then? What's holding things back?
Well, you're either going to have cross-border consolidation or domestic consolidation. Cross-border consolidation has always been difficult in the financial sector, and it is probably going to become even more complicated for the reason that at national level, the authorities are going to be worried about savings generated in one country being used to finance activities in another, especially as they want to generate economic growth in their own country. And domestic consolidation, there's already quite a bit, in some countries, quite a bit of concentration, and I'm not sure that the competition authorities will allow it. And if it does happen, it's going to be an employment bloodbath, which is not what the public authorities want to see. So difficult to see how that consolidation is going to take place. But quickly on another point, one that, frankly, I haven't heard much focus on. We focused a lot after the crisis on solvency, on liquidity. And frankly, the rules that have been put in place are very robust. Everyone has said it, the banks are no longer at all the weaklings they were. But what about operational risk? Are we ready for another 9/11? Have banks, have market infrastructures really expanded their protections against that? In the US, yes, because 9/11 happened in New York, and the public authorities gave them no choice. In Europe, very little. Are we ready for a massive fraud à la Kerviel and the financial implications that could have? Are we ready for cyber attacks of the sort that are taking place? Most of them are being prevented by banks, but as someone said in London not too long ago, the role of banks is to prevent 100 of the cyber attacks from destabilizing them. The objective of those who do these cyber attacks is to succeed once in 100 cases. That's enough for them to make money out of it. So are we ready for that? And what worries me really in that connection is that the softwares, the systems of banks and market infrastructures are increasingly an old set of systems which have been built on top of others. And therefore, to try and make them resilient to what I've just mentioned will cost an enormous amount of money. And there is no money available these days. Why? Because of that structural low profitability of banks.
Well, perhaps they should be part of the recovery and resolution plans, your ability to withstand hacking. Urs, your final say on what's keeping you awake?
Well, I wouldn't have such a gloomy picture as Pierre just laid it out, but I think in essence I would agree with him. I think the one thing that really worries me the most, because it has been underappreciated as a topic, is cybersecurity, I would say. As a global topic and follow from that system stability, which has a lot to do also with the more complex systems framework we have to have as a result of regulation and operational complexities that we have. But these two things taken together are, in my opinion, are probably one of the biggest threats that I see at the moment for banks.
Andrea, you seem to have the last word on your nightmares. Perhaps you can tell us what are you setting your sights on as the next challenges in a way? I mean, we've heard from Pierre the need to stop the hackers, really, from destabilizing payment systems. We've already seen some problems in the UK. What's keeping you awake at night, apart from the immediate turmoil in banking shares, but going forward?
Well, going forward, I mean, can I maybe just 1 second, if you allow me, sure. On this point on regulatory uncertainty, okay? Let me say this straight. I mean, there is nobody more than me and my staff who want this to be over. I mean, this regulatory re-regulation process, I mean, we are exhausted. I mean, we really want to be done with it, and the sooner we close it, the better. And we have done huge efforts, let's say, to give certainty. There are areas in which, let's say, regulatory products were already agreed basically years ago, and it was decided to phase them in at the end, like the liquidity ratios or the leverage ratio, and we are now in the phase of doing it. So this is not, in my view, regulatory uncertainty. On the issue of internal models, we have done a lot of work. We have done a discussion paper last year, huge consultation with involvement of the industry. We issued a clear roadmap on how we think these issues should be fixed and the next steps we need to do to address it. And I think this was very well received also by the industry. So we are trying to give certainty as much as possible, and I'm really keen to get this done. Now, on the issues that keep me awake, let me say, first of all, that I'm sleeping much better now than 2 years ago. That I agree with Sylvie. We brought the banking sector to a much safer place now, and that is making me sleep much better, notwithstanding the recent market turmoil. I think that we have now achieved, on average, a satisfactory level of capital for the European banks, and we still have some legacy issues that we are dealing with, like asset quality, for instance. But let's say we are and low profitability. I mean, I think these are the two main issues, and they are two sides of the same coin, to be honest. So this is a relevant issue going forward. The key points that I see are, in my view, going forward are, first of all, the changes in the liability structures of banks to comply with the new resolvability requirements. I think this will be an important challenge, and the key aspect which has already emerged in the first cases we had at the end of last year is the distribution of bail-inable products to retail customers. I think this is something on which we and together with ESMA and the EIOPA have already issued a warning a couple of years ago. It's a topic on which we need to focus our attention, but the point is how to go to a liability structure that in which everybody, the resolution authorities, prudential supervisors, conduct supervisors, issuing banks, investors, everybody knows what is bail-inable, what is not, and where they sit in terms of the structure of the liability structure of banks. I think this will be an important challenge. The other point, you're right. I mean, this issue of payments, of digital disruptions, will become crucial. There is definitely, from the point of view of the European legislators and also regulators, an intention to increase competition in this segment. We do have an opening to third-party providers of payments, for instance, and we have also this issue of access to information in accounts, and this type of competition between banks and third parties, I think, will be a crucial challenge for all, for regulators as well. We have, for instance, in the next years to deliver, I think, 11 standards in this area, and I think the most challenging hot potato will be in the area of security. How do you ensure, let's say, that this process happens in a secure framework, that information is accessed in a proper way, and that interaction between banks and non-banks is protecting level playing field and security for customers? I think these will be main challenges. Thank you.
Good. Well, on that note, thank you very much. I think we've run out of time. I think it's been a very interesting panel. Regulatory operational risk, that's a new one for me. But a very fierce defense of regulators by Andrea saying the final shape is there, and you just have to get on with it and work out how to make money in that final framework. Thank you very much.